Hey everyone, it's another Monday, so we have our FogCutter Live coming at you. I'm Mike Curtis, along here with Preston James, options trading legend and founder of Traders Edge Network. And so, Preston, we're excited for another one. We got all sorts of things to talk about between new
Sure.
developments over in Israel, Iran, the U.S. getting involved. Just a hot weekend of some headlines, and we've got how that's impacted oil, of course. Most people that are plugged in have seen some of the Tesla news about their Robo taxi. We've got some earnings on deck, so we've got a fun one with a lot of ground to cover.
We do. And I'm coming at you remotely here today from downtown San Francisco. So it couldn't be a more lovely day. It's like 58 degrees outside. I think that's 40 degrees cooler than where you are. We're just an hour and a half plane ride.
Yep. Yeah, awesome. Well, let's dive in. So the big news, of course, U.S. got involved, did some strikes against Iran's nuclear facilities. That put a whole bunch of question marks on how the market was going to open today as that news hit over the weekend. And I think to the surprise of a lot of people, as I looked before we hit, the record on this, everything was just kind of hanging in positive territory. And so it felt like most of the markets were just kind of shrugging off that new news. Oil spiked briefly and then that kind of settled. So Preston, what are your 2 cents on?
It's always interesting. I've thought about it all weekend. Like, wow, here, what's the market going to open like up on Monday? And I think the importance of realizing that what we call the market cycle and then the economic and the news cycle, it very often can be different.
Right.
The market is just freshly through its yearly averaged correction, which was very steep this time, closer to 20%. Usually a market correction will to qualify one as a 10% pullback, but we're freshly on the other side of that. And still, there's a lot of people close to me and friends, and they're like, I don't know if I can do stocks right here. They're petrified.
Mm-hmm.
And I'm saying it's go time. It's go time for the market in general, for the market of stocks in general.
Right.
So it's interesting to see big news over the weekend.
Totally.
And how the market reacted as we see it today on Monday.
Yeah, definitely. And we talked a week ago about how these geopolitical events can impact the markets. And if you didn't catch that episode, go back and take a look. But in short, we talked about how when an event like this breaks, usually in the short term, the market can feel that uncertainty, right? The market hates uncertainty. It can feel that. And usually there's a little bit of a dip, not anything too extreme or crazy, nothing like what we saw in March and April with that 20% correction you talked about. Mm-hmm. But then at the 6-month and 12-month marks, looking down the road, the market performs just like an average, no news, no geopolitical event would have behaved anyway. So 6 months, 12 months down the road, the market usually just shrugs these things off. And we talked about that more last week, so go check it out. But just to reiterate that point, is it can cause that short-term uncertainty, but then usually 6 months down the road, 12 months down the road, it's like it never happened.
Exactly. No, that was an incredible chart just to see that, have that come alive. And
Definitely.
Then
go ahead.
The big, story and what's carrying most of the weight today is the action in Tesla. Finally having the Robo taxi event. It was so debated hotly. I don't know if you see the forums online about Tesla stock, but it is a love or hate. It's like the Dallas Cowboys. You're either totally on board, maybe to the delusional bent, or just a complete hate. There's no in between, it seems like.
Yeah.
And it's shining today with the price action and volume. With all of the commentary and the feeling. This isn't just commentary. It is just very, very emotional on one side or the other. But I think at the end of the day, the technology as it's unfolding, it's like, I often think of this, Mike, could anything have stopped pickleball from growing? I hear it come up almost every day.
Right.
It's come up on this trip. Hey, we're clearing this out. They're doing something in Eureka, California to this mansion on the property, and they're updating it. And they're like, well, the pickleball
Yeah.
courts are going to go over there. It just comes up. Could you have stopped it? No. Can you stop the unfold? We just got into Waymo last night, went to dinner and back, and just commented on how much you love just not having to do a conversation with a driver, how good it smells. You feel safe. You can open the door with your app as it pulls in. Your name is spinning around the top saying, "Oh my gosh, this is my car." I'm like, yes, we're never going back from that. We're not going back from AI and self driving and
Right.
robo taxi and all of the stuff we can't even see. And you can't stop it. So you can be emotional, you can be tied up in it, you could not agree with what Elon said here or there, like him or hate him. It's way bigger than him.
Right.
So
And
look at the emotion on this chart of Tesla. Wow.
and just put it in perspective. I know when Google had their last quarterly earnings, they said, because Google owns Waymo, the other kind of robo taxi that's out there right now,
Mhm.
they were delivering over 250,000 rides per week in those Waymos, and it was really in, I think, just three cities, right? San Francisco, Phoenix, maybe there was one other.
Well, in LA, we saw them being damaged in the riots there.
Right. So a um, pretty small sample size is already gaining quite a bit of traction. And, a lot of the things that I've read and the research I've done on the Tesla side of that is they have their cars all over the road that are constantly upgrading data or, uploading, excuse me, data back to Tesla, where because of all this data they've been able to capture just from the regular Teslas being driven by human beings,
Mhm.
they are going to have the ability to expand, I think, at a little faster clip, is some of the things I've seen and studied
Right.
on
Yeah,
that side.
they're years ahead on right memorizing the road, feeding it back to all the servers, just
Definitely.
the infrastructure.
So yeah.
You and I have no idea. We can hear and read, but we really can't see what we can't see. And anyway, very emotional stock here. I'll just mention just on the side, going back into April when we had just cleared that follow through day in the overall market. I
Mm-hmm.
just remember in the event in Phoenix, and Waymo was running around there, but we were talking about. I remember saying, "Hey, look, Tesla's probably uh, has an upcycle. There's been a lot of down.
Right.
It's really covered a lot of ground on the downside." And I remember we brought up a ticker TSLL, which is it's a leveraged ETF
Right.
with Tesla, but they also sport you a little dividend. The real yield one is TSLY, but there's all kinds of offshoots now on these larger stocks
Mm-hmm.
that do options in the ETF. And just owning the ETF, you benefit on the income that's derived, and you can set it to buying more shares.
Right.
And it's just really a wide open world as what you can do on individual stocks.
Yeah, I love it. So that's a good one to watch.
Yeah.
And I want to talk a little bit more about the broad markets, but let's save that for just a minute when we can tie that in to just kind of how we like to trade it being option sellers. So before we jump into that, really to kind of wrap up what's on tap this week. So our Fed chair, Jerome Powell, he's testifying before Congress Tuesday and Wednesday. That always has the potential to impact the markets, of course, what he thinks about monetary policy, interest rates, if that's going to happen sooner or later, if they're going to keep it at the expectation of 2 rate cuts this year, or maybe it scales back or increases. That always has the potential to bring some volatility. So that's Tuesday and Wednesday. Then we have our core PCE, which is kind of the Fed's preferred inflation gauge.
Mhm.
It's a way we can see some of that along with some personal income spending and jobless claims that'll be hitting this week. So a few things on tap as far as outside of what we've already talked about with the Iran, Israel, now US conflict. There's a few other things to keep in mind as far as the news, economic news front is concerned.
And that PCE coming in Friday before the open.
Right.
So, and we have a full week of trading, unlike last week. So,
Yep. And then On the earnings front, there's a few companies. One that we watch pretty closely, especially lately, is Nike. They've got earnings this week. FedEx, which is another big one that people use as a gauge of how the economy is doing.
For
And then
sure.
on the AI front, semiconductor front, we've got Micron, that's got earnings this week as well. Anything else you've got an eye on?
Yeah, well, Carnival Cruise Line, just to see if that's still coming back. That they come out before the open on Tuesday. They own so many other cruise lines, so I mean, they're for the leisure in that travel segment. It'll be interesting always to see that. And then Paychecks,
Right.
they don't have weekly options, but they're just such a force in payroll and how the economy's doing. So that's always interesting to see how they do.
Yeah, and maybe just to clarify what that PCE report is that comes out Friday morning, that's the personal consumption expenditures. So they're looking at the price of goods, but they take out some of the really volatile like food and energy, that's in some of the other
Hmm.
inflation type reports that we get. So this is meant to be a little more of the stable baseline of what the costs are looking like out there, where different things can impact crops and the prices of food, and then of course geopolitical can impact the price of oil and energy and things like that. So the PCE report is a little bit more of the stable, kind of foundation of what the pricing is looking like on a lot of things out there.
Interesting. And just to know too that light on earnings this week, even though those are big names, light next week, and then the week after, we're starting earnings season again. Here it comes.
There you go. So
Mhm.
yeah, so let's talk P again. We mentioned just kind of the broad markets. They covered a lot of ground. April 7th, I believe, was the low. So maybe we could put a chart of just the S&P 500 up, and just the natural, price action that you tend to see when something covers a lot of ground quickly. The tendency is to either see some profit taking and a pullback, or we can see a little consolidation, because pretty much what we're seeing is when the markets, or just an individual stock for that matter, gets really stretched above the moving averages, it becomes tough for the bulls to have that appetite to keep buying, to keep pushing it higher. So we'll see a pullback, we'll see some consolidation while those moving averages play a little bit of catch up. And it wouldn't be surprising to see a little more consolidation. This last week, the market just kind of is bouncing around, pulling back slightly, not doing a lot. And because we've covered all that ground in a short period of time, it's pretty typical to see that behavior. So that could linger for another week or two, whatever it might be. So, Preston, what I love about Trader's Edge and how we teach our clients to trade is market conditions like this, where maybe the price is just kind of stuck in a range for a week or two or three, or maybe a month or two,
Right.
will yet to be seen. But when we trade some of our strategies, that price action can actually be a good thing for us, where compared to other strategies, buy and hold, things like that, you're not getting any return on your money. It's just sitting there tied up.
Absolutely. We love sideways action. We love trading with the market cycle and with a strategy like the money press. There's so much intensity daily, of course, but weekly. And where's I'm going to close? For we don't know how it got created that way, but the world's in a race, wondering and betting and being curious on where stocks are going next. And
Right.
rather than us sitting there wondering too, we can diligently and consistently be selling weekly premium, which is what the money press is all about. We wanted to come up with a fun name for it too, like, hey, this is just a money press, like printing press, those papers coming off, and
Right.
the sound of the machine and the hum and spitting them out. But with dollars, right?
Totally.
And yeah, it's a beautiful thing.
Yeah, definitely. And even if you just have stock shares that you're holding, that you've had in your account, or maybe that's part of your investing strategy is owning shares, we love to sell call premium as well on those positions, which again, if your stock is just sitting stagnant, but there's weekly options available on those shares. We can be selling the call premium and still collecting some income, still getting a rate of return on our investment when the stock's really not moving. So it's, in our opinion, you just have to know how to trade options to maximize your returns.
Absolutely. And we don't say it enough because we assume it and we just know it cold. But when you sell option premium by the week, if you take 4 of those, if you do it weekly, and then you add up what that premium is, and this is across all sectors and whatever, you receive double the income. And that's conservative. It's often a little bit more than double than versus selling the 1 month premium. So that was the real breakthrough. This only happened in the spring of 2010.
Right.
So this is, I mean, option. No one really gets options anyway, and options are like 60 years old, and weekly options are 15 years old. So they're a baby basically on the street, but they've grown so much. Mike, too, the most recent stats are of all the option volume traded right now, 60% of it's happening on the weeklies. That's where the people are. That's where the money is. And that's what the Prestonomics thing come out. Where the people go, the money will flow. That's where the hordes and the crowds are.
Yep.
And it pumps up the premiums. We like to put it in our pocket.
Yeah, love it. So yeah, good stuff, good insights. So to wrap this one up, we have a question from one of our clients. We want to get to that. But before we do that, we had to spotlight one of our clients, Dennis K, down in Texas. I hope I'm saying the city right. Laco? How would you pronounce that one, P?
Yeah.
He'll probably be like, you Utah guys. But no, his really fun story. We got it on the screen here. He heard us through our Brian Kilmeade interview that you did, Preston. So he must have been a listener there. He's funded his account with a little over 19,000. He said 1 month later, my account's grown to 26,132. So up 7,000 in just a month. I don't even know the percentage of that. I mean, pretty phenomenal. A 30+% gain in just a month. And he said, all I can say is that it's an amazing education I can use for the rest of my life and realize fantastic income potential as I'll be at retirement age in the next 5 years. My trading account summary values are proof the strategies really do work. And then he shows some thanks to you, Preston, the rest of the team. Just loves that he says we're not some suit and tie organization. He's like, I'm much more comfortable with the pirate who wears T-shirts like I do. I love that part as well.
I know when he wrote that, I'm like, am I wearing the right shirt for this broadcast? I guess.
Got us both in polos as he's shouting out the T-shirt. So thanks, Dennis. He was actually signing up for our 250 club as part of our WoW Insider membership. We have these fun different milestones that our insiders can track how they're progressing. And one of those is, they join our $250 profit club. We have a $2,000 profit club, a 5-figure, a 6-figure. So it's really fun to just see our insiders progressing through these different levels, these milestones, and sharing their success with us. We love it. I know, Preston, your wall here in the land office, even though you're coming at us from San Francisco today, it's just covered with stories like Dennis's. That's what we love.
We love it.
Doing this. I know it really ripples through all of the crew here at Trader's Edge how much Preston just loves and appreciates hearing these success stories from people like Dennis. So great job, Dennis.
Nice job, Dennis.
And to wrap this up, so here's the question, and it's a great one. It's actually super relevant because we talked about how the broad markets could go into some consolidation. But I mean, at any point in time, news can hit, things can change, where the market could go into more of a sell-off. It could go into a little bit more of a drop, a downtrend, right? We're always on our toes as traders and investors. So this question can come in right along those lines. It says, can I turn the money press more into a bearish defensive trade if I expect the market to pull back. So Preston, sound off on that, and then I'll see if I need to chime in at all. But I'm
Yeah,
sure
and I know you explain this a lot on your Thursday MMP. We have all these terminologies, but MMP is Mike's mastermind project because Mike's a veteran of coaching Traders Edge clients, 500 Traders Edge clients, and he's transitioned now where he oversees our mentor. He can just see so much of our organization. And Mike, this would not be Trader's Edge without you. I just want to make that
thanks.
clearly
Appreciate
known. But you stay active and plugged in trading with your Thursdays. And so I do want you to talk about this. But in general, with our money press strategy, we focus on this where oftentimes it's about 70% of what we're doing strategy wise in the market is the money press. It's so key and so reliable.
that. Mm-hmm.
So a feature of this is if you don't sell your weekly premium, what you're left with in the money press strategy is owning a longer, we'll say intermediate term, this could be 2 to 3 to 4 months out, a put option.
Right.
And so if the market does decide to kind of turn over and struggle, if you will, what you're left with is a bearish position that grows as the market, it grows higher as the market struggles lower, just in a nutshell there.
Yeah, it's really great because, Preston, both of our fathers kind of came from the real estate development world, and I know we've shared stories over, how long it could take to sell a property or get a deal to come through. It could take months or years sometimes. And what I love about investing is with a click of the mouse, literally within seconds, you can be in or out of a position. So to your point, with one click of the mouse, we can flip the money press from a bullish to neutral strategy to that bearish strategy because the money press is a spread. If you've never traded it, we're selling a weekly put and then we're buying some protection underneath it.
Mm-hmm.
And if we take away that put that we're selling, it's a directionally bearish trade. So just like that, we can flip it a bearish trade. It doesn't have to stay that way forever. We could just flip it for a week or 2 weeks if we think the market's coming into some turbulence, or maybe it's gotten really stretched. We think that pullback might be coming. All you have to do is just not sell that weekly put, and you've got a directionally bearish position. And if the market does go through that pullback and now it looks like a great buying opportunity, we're in a perfect situation to sell that put again, get the money press on to where that market might be trying to now climb out of it. So it's really flexible. We can be really nimble with a click of the mouse. Then a few seconds, we can flip a bullish to neutral strategy, boom, just like that, into a bearish position. So great question, super relevant. And luckily, the way Preston's built the money press is that it can be a really nimble, flexible strategy to take advantage of that very thing.
Absolutely. And I think the theme behind what you just said is the word control.
Right.
And in the click of a button, right, you're in control.
Absolutely.
Yeah.
Yeah, great stuff. So if you want to learn more about the money press, we give out the book for free. You just cover shipping. You can go to moneypressmethod.com, moneypressmethod.com. And if you've already been following the money press, we talked about those milestones for insiders. There we go. freemoneypressbook.com. Get your hands on your own copy. It explains just the foundation of the money press. We give it out for free because we want you to see if it's a good fit for you. Some people, it might not be your investing strategy, it might not be something you're super interested in, but we want you to just be introduced to it, to check it out. Most people absolutely love it. So freemoneypressbook.com is where you get your own copy of that and learn about a really flexible option trading strategy where you just have a lot of control as a trader.
Absolutely. I always say, look, we're the 20%. Major volume that you see is done by these big institutions, these big oil tankers. I've got the Bay, San Francisco Bay out here behind me, and the container ships are coming in, making their wake, and they're them, but we can be us. And a strategy like the money press is no matter how many of us do it. That's why I feel like I'm on a mission to get this in as many people's hands as possible,
Right.
because this is how we fight in the market and thrive.
Yeah, it's good stuff. Well, P, I'm sure you got a few things lined up for your last couple days in San Francisco. So why don't we sign this one off? But thanks for peeling away from the trip
Absolutely.
to have our FogCutter live session here. We love doing these. We know we're already getting great feedback from people just loving to get some insight to start the week. So thanks for peeling away from the
Absolutely.
trip. Happy birthday again to Jen. Have a good rest of the day. And anything before we sign this one off?
Hey, just glad to be with you. And it's always fun to start the week off on this note. So thanks for everyone's support and glad you guys are enjoying it.
Definitely. All right, we'll sign this one off. Thanks,
All right,
P.
take care.